Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today is the 20th of November, 2023. So, welcome, everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, guys, I hope you're all feeling nice and refreshed after the weekend. Before we go further, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. So, right. Let's have a look at what's happening here. Basically, by the way, just to let you know that this week it's going to be a little bit of a short one for me. So today and tomorrow today we're already having the video, the webinar, and tomorrow as well. But Wednesday, Thursday, Friday there won't be any webinars. I will resume on Monday after that. So, but yes, guys, I hope you'll I hope you'll manage. But yeah, I'm joking, of course. Look. Let's have a look at what's happening here and in the way how we can prepare ourselves for this week. This week looks a little bit on the quiet side, but to be honest, that's not a bad thing. Maybe a bit of a bit of like retracements could be nice, but again, we'll see. Let's have a look what's happening here. So Nikkei 225, yes, we are seeing. We saw that break last week of the upper side of the rising channel, and then I said to you that, look, if we do break that, then I'll go higher, but then we reached my target, the 33,485. I said to you that if we do push and stay above it, then yes, great, more buying could be seen here, and we could end up aiming for that 34,033 zone here, marked by the highest point of June. Now, for now, let's put it this way. I think that in general, I would like to see some like correction here. Maybe actually a nice move here back down could be nice towards the upper side of this rising channel. And then if, let's say, it doesn't break it, a nice rebound here from here could be possible. And then we could go higher. So in a way, we had kind of in the past 3 weeks, we had kind of a decent up move already in indices. So maybe a bit of a retracement could be nice. And I would say maybe, let's say, this week would be ideal for that. And then let's say we could finish off November with a massive rally again to the upside. So look, but that's pure speculation, honestly. I don't have any grounds for that. This is purely what I would probably like to see, right? I mean, but the market doesn't always give me what I want it to do. So I mean, what I want to see. So unfortunately, we have to adjust. So at this point, looking at Nikkei, that's my game plan. That's what I'm gonna look at the moment. And yes, if I can kind of get something, like this, then I would be very happy if I can get a rebound from this upper side of the rising channel and then a push higher. In terms of Japanese data, there's not much actually, and if I'm not mistaken, almost nothing. Yes, Thursday's is a public holiday there, and Japan. Friday. Yes, we have the national core and headline CPIs coming out. So from Japan. So look, it's going to be Japanese turn to show us what's happening with their inflation. So, but again, Friday is going to be like that weird day where I think that because on Thursday the U.S. is closed, then they're closed on Friday, but only like they're not working the full day. So that's why it might be like a little bit of an off week, but hey, let's see. Maybe actually it will present itself with some surprises. China 50 index, so yes, we are still holding below this downside line, so that's all okay. However, I talked about this idea where I needed to see a drop below this 11,925, 11,880 zone here. If we do get that drop, great. Then our next target could be this 11,740. A break of which could set the stage for a move towards the lowest point of October near the 11,557. But again, if you're looking for some higher levels, then certainly yes, a break of this this downside line would be required. ASX 200. So this one's a little bit of an interesting one for me, to be honest, because it looks quite bearish actually. But again, I cannot really talk about that yet because we still need a little bit more time. So look, we do have tomorrow morning, we do have the RBA meeting minutes coming out. So okay, they basically the minutes of the meeting which we had last time where they've hiked rates, but they want us, like, I think that the market wants to see like if how aggressive the RBA still remains, if they're still willing to go and raise rates. So that's why I'm kind of leaning towards that idea that, for example, this week could be a bit of a, a retracement week. So, we have some other meeting minutes coming out. So I'll jump into that in a bit. So that's why. So this whole kind of, sentiment and could roll around and the central banks are still willing to raise rates, so yeah, let's put the indices down a little bit. But then the next week comes and like, oh, there's some good data here, hey, let's rally, it's a Christmas rally, so there we go, let's go. So long story short, for now I would say this way: if I'm looking at the technical picture, I can see that there is potential here for some downside, but again, in order to consider that idea, I need to see a drop below the 7,064 territory right here, which I previously looked at as a good area of resistance. Now it's taking the role of support, so if we get a nice drop there below this, then yes, I will consider a move maybe a little bit lower. Now, don't get me wrong, I'm considering a move towards the 50-day EMA first, and if that gets clear, then yes, my next target is the 6,954 territory right there. So, in terms of the upside, well, I would say I'll take a very conservative approach here, and I'll wait for a break of this downside line drawn from the high of this 27th of July. And if that gets cleared, yes, and we push above the 7,174 territory right here, then yes, I will go to the upside. But at this point, I'm just being a little bit on the careful side, so I'm not rushing into things, especially when the meeting minutes are coming out on Tuesday, the RBA meeting minutes. Jumping into the Dow Jones Industrial Average. Oh, and by the way, good morning, everyone in the chat room. There we go. Good morning, everyone. I hope everybody's having a wonderful start of Monday. I hope you're all feeling nice and refreshed. So yeah, look, Dow Jones Industrial Average. Now I talked about this and I said to you that, look, I have this steep upside line, which in a way could be a nice support area. So let's say if we do retrace back down, we could test it and then rebound from it. So at the moment we're testing it. Now my question is, will we get that rebound? In general, of course, some of you are kind of expecting, let's say, another third wave to the upside here. And yes, I mean, that could be nice in a way. But let's see, maybe a bit of a retracement here could be nice as well. So if I just, let's say, try to draw my favorite Fibonacci from this low here, and when it started pushing higher to all the way to this high, then you'll see that we have this 23.6 here, somewhere around this 34,870 zone, something like that. And if we do break this upside line and we clear it, then yes, I'm leaning towards the 23.6 here. And if that gets cleared, well, this is where it could become a little bit more nice, because we could see a move maybe towards the 38.2 or maybe even the 50% retracement on the Fibonacci. But okay, for that, we need to see a break of this upside line first, and then we could take it from there. So in terms of the upside, let's say to be a little bit more on the careful side, what you can do here is you can keep an eye on the highest point of last week near the let me just grab this line here. It's near the 35,167 zone. So if we do get a nice pop above it, then yes, great, more buyers could join in, and then this would confirm a forthcoming higher high. Of course, with the US, guys, keep your eyes on the Fed meeting minutes that are coming out this week, and if I'm not mistaken, that's coming out on Wednesday. Let me just double check very quickly. Or no, is it Tuesday as well? Yes, it's Tuesday, guys. Apologies. So tomorrow, yes, we have the existing home sales coming out from the US, and then followed in the evening, we could see some volatility maybe, and we could see the, like I said, yeah, we'll see what the Fed meeting minutes have to say to us. So at the moment, I would say, like, just be a little bit more on the careful side. Like I said, this week might not be the most volatile week. However, it still could present itself with nice opportunities. So, let's not exclude anything. Look, for now, I would say this way. Yes, these are the levels that I'm watching, and I'm going to stick to them, and I'm not going to do anything else. So if we do break this upside line, I'll go towards that 23.6, and if that gets cleared, this is where my arrow starts here to examine lower levels. S&P 500. So we're stalling. Yes, we're retracing back down a little bit, so which is fine, which is all okay, because look, I said to you before that in a way, maybe a bit of a retracement here could be possible before another leg of buying. So we have our first wave, then we have our second. This is where me jumping into like Elliott wave analysis, so wave one correction, wave two correction, wave three. So, and then we can have our the other ABC correction as well. So, but again, that's if you follow that logic. In general, for now, I think that if we oh, just a sec, what's happening here? Why did it crash? I had a line there. Right, okay, that's fine. Let me just get rid of this actually. I wanted to grab this this line and this trend line and draw it this way. So you can see that we have this steep upside line, which, to be honest, maybe not the most beautiful one here, but okay, look, something like that. So SBMS, hey, good morning. Yes, good morning. I hope you're well as well. I hope you're well as well. Thank you very much. So look, again, steep upside line, maybe it's not going to carry much significance because it's way too steep, and maybe we'll go for a correction here, move down, test the 4,500 zone, and then rebound and push back up. So basically that would lead to a break of this upside line, and everybody would start getting a little bit more bearish, but then actually we're going to find support near this territory and just rebound and push higher. So that's why ideally I would like to see a drift back down and a test of this this downside line right there from the other side, and yes, then we could take it from there. Sorry, I just needed to wipe my head a little bit because it's all shiny, and yeah, look, for now, let's put it this way. If you're looking for some higher levels, I think that we need to wait a little bit, or at least wait for a pop above this barrier right here, the 4,540 zone. If I get that breakout, then yes, this forthcoming higher high will be confirmed. Then potentially this could attract more buyers into the game. But again, I'm kind of leaning a little bit more towards a bit of a correction in order to kind of justify a further move north. But the correction, again, like I said, it could be short-lived, so maybe something around this, yes, 4,500 or this 23.6, which is a little bit lower, and then yeah, we could take it from there. NASDAQ 100. So yeah, similar story, basically not much to say here, but I can see that this 15,916 territory is providing fantastic resistance so far. So if you're looking for some higher levels, then probably a break of that barrier would be required in order to go higher. In order to go lower, I would need to see maybe something a little bit deeper, maybe like a drop below this territory, below that 15,600 zone, in order to consider a larger correction to the downside. Just bear with me one moment, guys. I'll disappear for a few seconds and I'll be back. Sorry about that, guys. Yeah, had to. Yeah. Anyway, personal things. The German index. So we're seeing a nice little correction back down, which is fine, to be honest. And actually, I think that this is a kind of a little bit of it's needed even for the same bulls. I think for the same bulls who still want to jump in here and take action, I think we're getting that nice little correction back down, which is fine. And I think that ideally it would be nice to see a little bit of a larger correction here, maybe like all the way towards that 23.6. So this is actually what I will draw here. And yes, if we do correct back down here, I mean, yes, it would be nice to see maybe a correction back to that 23.6 for a little bit, and then kind of rebound and push, higher again. So that's if we are willing to go further north. Because look, I mean, on a weekly chart, you can see that last week that was a spectacular week for the bulls. I mean, from this 15,300 all the way to that 16,000 mark. That was, I mean, but not to mention from the end of October, if I'm not mistaken, from the end of October, we started, well, the 30th of October or something, like 27th of October even, Friday was like this. So from here, we just traveled from like 14,600 and all the way to 16,000. Wow. I mean, that's a spectacular move to the upside. So let's put it this way. At some point, yes, a little bit of a correction here is needed, although I get it. Some of you are aiming maybe for this territory right here, which is fine. Actually, it would be fine, because it would be nice to see a corrective move back down and then maybe, a move towards this area. But hey, we don't get everything what we want, so we'll just have to go with the market and how it, what it presents to us. Daredevil Dave, good morning. I can see you there in the chat room. Good morning. I hope you're having a wonderful start of Monday. So let's jump into FTSE 100, guys. So yeah, at the moment, yes, also seeing a nice little retracement, which is fine because we got a hold up near the EMAs, so that's absolutely great. So in a way, if this is still willing to go towards higher levels, let's say for a larger correction to the upside, then a push above the EMAs here would be needed. And if we do clear it, then yes, great, more buyers here could join in. So long story short, I'm not going to spend too much time on the FTSE. Basically, we do have a bit of data coming out this week in UK. By the way, I forgot to mention that in Europe, we don't have much. I mean, we do have on Friday, if I'm not mistaken, let me just double check something. On Friday, we have the, I think it was GDP numbers from Germany. Yep, that's correct. So on Friday, we have the GDP numbers from Germany. So maybe, not the most exciting, but for DAX, for the German index, could be exciting. So just keep that in mind. For the UK, I think that the main one will be the, where's that? Inflation report, which is coming out on Wednesday. For UK, that's going to be, yes, interesting. And of course, we do have some BOE governors speaking, which specifically Bailey, Mr. Bailey. So yes, he will be speaking on Tuesday, tomorrow. So keep your eyes on that. But what's interesting, very, very interesting, is are the car registration numbers in UK. Now, this is something that kind of is showing the health of the economy. Now, this is one of those readings where actually the forecast does really matter, because look, last reading we had, it was, where's that? Yeah, so last reading we had was like enormous, was like 218%, that came out. But that was normal because those were the numbers for September. Now we're going to be getting the numbers for October. Obviously, the way the UK market works, because you have normally peaks in March and September because of the registration plate change, that's why those numbers. But we always look at actually the forecast, because that's why quite interesting, to see if we do get something like close to the forecast. Now at this point, I think that there's nothing, no forecast. Maybe they will show up later, but at this point, look, I mean, it's the figure that comes out is like the expectation as well. I mean, the preliminary number as well, kind of. Sorry, there's no preliminary. What am I talking about? Honestly, I think I'm already going into the woods deeper and deeper. No, there is a number that came out in November, in the beginning of November, but I don't think that that's something significant. I think that, yes, everybody's waiting for the official number to come out tomorrow. And the previous number was 218.3. Now, if we compare like to like, we are expecting a lower number. So let me just double check very quickly. So yes, in October, in November last time, we had a drop by about like minus 40%. So I think that this is kind of a gauge, basically. So around like minus 40% for November, for October number, which is released in November, it's kind of fine, I would say. I think that that's what the market kind of estimates. But if we get a much lower number than that, let's say double, right? Now that's where I think it would be worrying a little bit for the UK market, because again, fleet industry is quite big in UK, and that's why I mean, sometimes these car registrations actually show the health of the economy in UK. So that's why just be careful, keep your eyes on the FTSE and also on the British pound. Let's jump into dollar, the US dollar, and there we go. We're seeing, and yes, we saw a nice decline here. We dropped below this territory, so I'll probably stick to my game plan. I'll say that as long as we remain below the 103.82 territory, then yes, I will continue targeting the downside. Now, if we do push above the 200-day EMA, then yes, potentially more buyers here could join in. So long story short, at the moment, I'm cautiously bearish, but at the same time, I'm not excluding the upside scenario at some point if by any chance this reverses sharply to the upside. Now, jumping into gold. Now, this one's interesting because after we've pushed above my 23.6, we reached my target near the 1992 zone, which is a nice tick. Fantastic. What's next? Well, this arrow can go. Actually, maybe we can actually put it here instead. And now I'm going to keep an eye on that 1992. If we do pop above it, I'll go to the upside. And if we do clear it, then yes, great, more buyers here could join in, and we could target that psychological 2000 mark. In terms of the downside, I would need to see a drop somewhere below this 23.6, which, as you can see, acted as a fantastic area of support. If we do drop below it, then yes, I'll consider a move lower. Silver. Silver is interesting here as well because we are near this key resistance area, which is this downside line drawn from the high of the 4th of May of this year. So if you're looking for some higher levels, then yes, a break of that is needed. So previously, when I talked about silver last week, in the beginning of last week, I said that, look, we have this downside line, we have the EMAs. If we clear it and stay above it, then yes, I'll go higher towards my that downside line, which is fantastic. We reached my target, so now we're stalling. Now we're forming something of a kind of a bullish flag or something like that. So in order for me to go higher, I would need to see a push. I would need to see a push somewhere above, this downside line in order to go towards this 25 region, somewhere around here. But look, let's not rush into things. again, let's see that break, if we can get that break. And if we can, and maybe let's say if we can push above this this level here, the 23.82, then yes, I will get comfortable with more higher levels. Oil. So beautiful retracement back to the upside. Yes, we're now testing again this downside line. So if you're looking for some higher levels, then certainly guess what? You need to see a break. You need to see a break of this downside line, and if we can get that, then great. I will aim for some higher levels. For the downside, this is where it didn't work out as I was kind of expecting it, but hey, not everything works out. So we need to, it's kind of back to the drawing board. So I still like this territory. I still like that 73.90, 86 zone, something like that. If we do fall back below it, then yes, I will aim for some lower levels. And if I'll aim once again for where's that? Let me just grab a line here. So I'll aim for that lowest point, the current lowest point of November near the 72.38. And if that gets cleared, the forthcoming lower low will be confirmed. Natural gas. There we go, guys. So we broke this line here. Look, I talked about this and I said that as long as we stay above this steeper upside line, then yes, there is a good chance for a drift higher here, and we did at one point, but then we reversed, and then we started testing this upside line. This is where I became a little bit careful and cautious because I didn't know if this is going to rebound again and push higher, but this is what we do all the time. So there we go. We broke the upside line, and this was my other scenario. I said that if we break this the steeper upside line, we'll go to the more flatter one. Well, we did that. So now the question is, can we continue to trade below this flatter upside line? By the way, the steeper one can go. I think we can draw something else, reuse it. We can reuse it and do something like that. So if we do if we do now continue to trade below this upside line, and we also fall below the 2.86 territory, somewhere around here, well, this is where it could become very exciting for the sellers, and we could see much lower levels. For the upside, I will need to see at this point now a break of that downside line in order to go higher here. So let me just grab a line very quickly. So let me just mark this one. There we go. So wheat, guys. So it's something probably you don't look at very often, but I think I need to adjust my charts here because this has been skewed. Yes, I mean it's skewed a lot, and it kind of moved away from my previous scenario. So I think it's better always to remove the drawings and start fresh. Now, first of all, we are marking the key support zone here near the which is the lowest point of September, near the 540 territory. Of course, we are also near this level, the lowest point of October. And the lowest point of October here is near the 547 territory. We're currently getting a nice little hold up there. If we do clear it and stay below it, then yes, of course, I'll go further. I'll go further south. And let me just grab a line here somewhere. So yes, I'll go further south, and then we'll just kind of take it from there. Maybe we'll target that psychological 500 zone. If you're looking for some higher levels, I think that at this point maybe okay, look, it's a little bit maybe on the difficult side, but maybe a push above this 596 territory or the 600 level could do the trick for a few more buyers. Because look, I know that some of you are thinking, but hey, what if it just rebounds from here? That's fine. Yes, that could be an idea because we're kind of in a range, let's say, and if this was, this lower side of the range does hold, then yes, maybe we could see a move towards the upper side of the range, and then, but I'm talking about the the cautious approach basically. So if you really want to look at this from that perspective, you can, but just remember that if suddenly it starts shifting heavily to the downside, it could break the lower side of the range, and then it could start shifting lower, because let's not forget that the prevailing trend before entering the range was to the downside, or is to the downside. So according to all the TA rules, such patterns tend to break in the direction of the prevailing trend. However, a confirmation break is still required. Cotton. Cotton is, I love cotton. Honestly, it's just amazing. Look at this beautiful rebound from the lower side of the range here. And Maxi, sorry, can you do 10 years, please? What, 10 years of what? I can do 10 years. Can I do another 10 years, or what do you mean? Be a little bit more specific, please. So, looking at this picture here, I mean, we rebounded from the lower side. That's great. And yes, of course, as long as we remain above the lower side of this range, which, don't get me wrong, I mean, the barriers here of this range are not very, let's say, we're not very strict with them, because we're just kind of, that's why I have areas marked here. So, you know, we tested the area, we reversed back up. So, and now in a way, if we remain above the 10-year yield, okay, yeah, I have it there. You mean, I'm assuming the US one, right? I mean, so yeah, I have it there, but it's at the end here, so I'll do this last one, because I need to go through this list normally. So yeah, this is the whole list I need to go through, just in case. Yeah, that's what I normally do. So a little bit patience, and yes, I will look into that one. But yeah, back to cotton. So yes, as long as we remain above the lower side of the range, then yes, I will consider maybe a bit of a rebound within the range here. But let's jump into Bitcoin. So this one is still stuck. I mean, look, okay, the fact that on the positive note is that we remain above the upside support line drawn from the low of the 27th of October. Okay, that's fine. The only thing is that it's not really really giving anything yet to the bulls. I mean, some of the bulls are thinking, hey, maybe we're going to be forming here something of an ascending triangle, and then maybe we will push higher, because according to all the TA rules, ascending triangles tend to break to the upside. But again, let's not rush into things, and let's see if this is not going to end up being maybe an ascending triangle pattern. Maybe it's going to end up being something like off a range. Maybe it will ignore eventually this upside line and then just going to start ranging, and we will have to relook at it from the other side. But that's why my downside scenario here is not on a break of this upside line, but actually more on a break of this territory right here near the 35,600 zone, something like that. And then yeah, we'll go from there. So Bitcoin Cash very quickly. Oh yeah, on the upside, on this one on Bitcoin, I'm taking a very conservative approach, and I'm waiting for a pop above the 38,000 mark. Bitcoin Cash broke the upside line, my upside support line here, and we've tested my 100-day EMA, which is fine, which is great. And I don't have any complaints here. I said that I'm going to go slow on this one. So now at this point, if you're looking for some lower levels, I think that the better option here is to wait for a break of this 100-day EMA, and then yeah, we'll go from there. If we can clear that, then yes, the next target is the 200-day EMA. In terms of the upside, I would need to see a break of this. I need to see a break up, push back above the upside line. If I can get that, great. More buyers here could join in. So, long story short, there is, like I said, at the moment, there is kind of a waiting moment, I would say, because oh, my earpiece came out. Just a sec. Oh well. It's on the floor now. We'll have to clean it. But anyway, so look, what I'm looking at here for the upside is extra, confirmation is this downside line. So yeah, I know it's not the most exciting analysis of Bitcoin Cash if you are trading that one, but just kind of, I want to be on the safe side here a little bit. So if we can get a push back above this upside line, great. I will aim for this downside line, but if that downside line gets cleared, that's where it could become even more interesting for a few more buyers. Ethereum very quickly on that one. So Ethereum, yes, it's stuck here. I mean, I don't really like it. So as long as we remain below this downside line, then there's still potential for a move lower. If we break the downside line and push above the 2020-30 zone here somewhere, then yes, I will go higher. Ripple, very close to the downside line. So yes, in a way, there is a chance for a drift lower. But let's not rush into things, guys, because a break of this downside line, yes, could do the trick for a few more buyers. This hurdle here is no longer needed for me. I think I'm going to be watching this instead, this 0.6296. I like it, actually. If we do get a clearance of that, we could get a clearance of the downside line as well, and we could start aiming higher. This level here no longer needed. We can mark this instead. I think this is a much better barrier here. This is 0.6710, and then we'll go from there. For the downside, I need to see a drop below the 50-day EMA, and then I'll go lower. Let's jump into Forex very quickly before I run out of time. So, looking at the picture here, AUDUSD. So as you can see, we're breaking this key resistance. I mean, this is spectacular in a way. I mean, this could open the door to some higher levels, and so far it is opening that door. My most biggest concern for now, so far, for today maybe even, is will it stay? Will it stay above this 200-day EMA and this barrier 0.6522, or will it actually drift back down? Because if it drifts back down, then it confirms a false breakout, and we could see a move to the downside after that, maybe like something like that. So let's not rush into things here. Oh, I'm just looking at my head here. I mean, I can see that there's like some sort of a dimple, like a little ditch here. Oh well, interesting. Yeah, going through some changes, life after 35, and yes, well, more than that actually, but just in general. Look, AUDUSD, yes, for now, that's my game plan. And as I said already, I'm watching this barrier here, the 0.6522, in order to kind of understand if I can see like further advances here. If we, now a few adjustments have to be made here. I can grab this line. If we do stay, yes, the next target could be somewhere around here. Good potential target. And then, yeah, we'll go from there. Basically, that's going to be my first area here, which I'm going to be aiming for if we do remain above the 200-day EMA. This area is roughly around the 0.661722 levels. AUDNZD. So, AUDNZD is an interesting one here, and yes, if we are looking for some higher levels, then there is still potential. There's still potential, and we could see a move somewhere here. I'm going to remove this level here. So, look, for now, I think that there is, yes, we could still see a move higher. So, long story short, I'm still targeting this key resistance barrier between the 1.0925 and 32 levels, approximately around there. In terms of the downside, I need to see a break below this upside line. And if I can get that, I can probably get as well a break of these EMAs, all of my EMAs on my daily chart. And this would attract, or potentially could attract, a few more sellers into the game. AUDJPY, okay, this one's interesting. Right. So, as I said before, AUDJPY is kind of a risk-on, risk-off environment monitor. So, you can see that we've reversed sharply on Thursday here to the downside. And normally when we see a rally here, then yes, we see like we see some buying interest picking up in indices, just because not everybody's jumping into the yen, because the yen becomes less attractive. But now it's kind of it's interesting that the yen picked up. Maybe the BOE actually didn't check anything on that. BOJ yen. So let me see if I can find any news. Maybe there's something like came out. Yen to prepare for tighter. Okay. So right. Okay. PIMCO. Yes. Okay. That's interesting. So PIMCO comes out. The hedge fund PIMCO came out and started buying the yen. Ooh, that is very, that is very, very interesting because now reports are coming out. So look, I talked about this last week. Reports are coming out now that the BOJ needs to intervene. Needs a tighter policy and blah 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 and stuff like that, which is fine. And I think that yes, it could be quite interesting actually. And for now, if we judge from those reports, then if we do see that if like a hedge fund like PIMCO started heavily buying the yen, maybe these guys are actually thinking that the market is actually going to reverse lower. So yeah, that's the interesting bit. So that's where my question arises. Actually, could we see a bit of a retracement in the indices? But that's okay. Look, for now, let's not rush into things. Let's not rush into conclusions. Maybe this is just like a strategic move. They will like a pump and dump moment. So let's see. But look, from the technical perspective on the AUDJPY, what I can see here is that we're currently getting a hold up near the 97.68 territory right here. So far, it is providing good resistance. I think I'm going to steal this highlighted zone here and put it here. After we reached the 98.66 territory, yes, we reversed and fell back below this territory. So as long as we remain below this highlighted zone, I'm going to lean a little bit more towards the downside. NZD, USD. So we're approaching key resistance again. I think I need to do this, and I need to mark this area. I think that that's going to be very important. If we do pop and stay above it, we stay above the 200-day EMA, we stay above all of my EMAs here, and potentially this could attract a few more buyers into the game, guys, and we could start maybe shifting our attention towards some higher levels like here. But again, before going there, maybe the first one would be nice here near the 0.6121, and then we could take it from there. In terms of the downside, I would like to see a drop somewhere below this area, below the 0.5940, in order to go for lower levels. In USDJPY, there we go. This is what I was talking about. So basically, yes, there is some weakness in the dollar. And also, there is some buying interest of the yen, as I understood already from the reports, which is logical. Which is all logical, guys. I mean, this cannot continue like this too much. I mean, they cannot like keep the yen devaluating. Yes, Japan probably enjoyed their moment of cheaper exports, their exports being cheaper for the global society, like global consumers. So but now I think it's also time not to forget about your own citizens, and this is where I think that this is what we're seeing right now. So we're seeing that happening. Look, I talked about this last week, and I said that if we do break this upside line and we fall below that 50-day EMA, then yes, I'll lean towards the 148.80. And there we go. We reached my target. So now what's next? Well, again, I don't want to rush into things. Yes, I like the further declines scenario, but I need to see a drop below that 148.80 zone. If we can get that, then great. I will aim for the 100-day EMA or maybe even lower. But if we don't get that, yes, that's where maybe we could start seeing something of a range of some sort. But again, I don't want to rush into things yet, so let's go slowly on this idea, because maybe it's not going to end up being a range. But let's wait and see. USDCAD drifting lower, so actually, well, drifted lower, but still found good support near the 50-day EMA. So it's doing a good job, but I'm taking a very conservative approach. I need to see a break of these two trend lines first in order to consider the next short-term directional move. USDCHF continues to slide, which is fine. I talked about this. I said that if we do fall below this territory, the 0.8888 zone, this will confirm a forthcoming lower low. It did, and yes, we can actually continue shifting our attention towards lower levels. And I do have this territory around here. This, I don't have a specific level, but area somewhere in between the 0.8745, 60 could be nice. Could be a nice, good target. GBPUSD very quickly as well. So we remained above the 1.2425 territory. I talked about this. So that's all fine. That's all good. We're shifting our attention to some higher levels, especially if we also pop above the high of last week near the 1.2506. If we can get that, a forthcoming higher high will be confirmed, and then I'll aim. Look, I have this, but this is not really making sense actually much. So, maybe it's something like this that we need to consider here, or I don't know. Honestly, I don't have actually, I think I just I get rid of it, and that's it. So, long story short, if you're looking for some higher levels, I think that the best option here for now is to wait for a pop-up of the 1.2506. Then the next target is the 1.2548, and then we could go a little bit higher towards the 1.2642 territory, and then we'll take it from there. GBPUSD is something that I wanted to pick up on because I haven't done this one for quite a while. And actually, I want to adjust a few lines here because look, some of it worked out, some of it didn't. But this is where we go back to the drawing board and we start fresh. So first of all, I'm going to keep this barrier here. I think it's still good. What I'm really interested in here is this little hurdle. So far, I mean, we did violate it, but it's kind of acting as a good area of support and that little breakout territory. So I think that maybe a drop below this 1.9047 territory is could signal maybe a move lower a little bit, but we need to be very careful because this 200-day EMA is doing a good job providing good support, because as you can see, it did it here, it did it here. Yes, we had those false breakouts, but that's fine. That's part of the game. This is where some traders get taken out, so because they have their stop losses somewhere around here, it goes a little bit lower, takes them out, but at the end of the day, it still stays above the EMA, and this is where a lot of frustration happens. So that's what I'm saying. So maybe the same story could happen again. We could, if we do drop and stay below the 1.9048 zone, then yes, I'll go towards that 200-day EMA. If that gets cleared and we stay below it, then yes, my next target is the 1.8858 marked by the lowest point of September. For the upside, I need to see a push above the 1.9328, period. That's it. EURCHF, so this one is interesting for me as well because again we are kind of moving higher and we're trying to move higher. I think that the better option here is to keep an eye on that 200-day EMA, which continues to provide good resistance. If we do pop and stay above it, then yes, I'll go towards higher levels. In order to go to the downside, a drop below the EMAs here, all my EMAs is needed. Not only a break of this upside line, because this upside line is a little bit on the tentative side, I actually need to see a drop and I need to see the body of the daily candle staying below the below these EMAs. EURNZD, beautiful decline, so that's fine, but we are still above this upside line, and we're below these barriers here. So in other words, could be forming something of an ascending triangle pattern, so keep your eyes on that one. But either way, for me, a confirmation break is needed. So in order for me to go lower at this point, I would need to see not only a break of this upside line, but also a drop below the 50-day EMA. And I would need to see the body of the daily candle staying below it. And if I can get that, great. More sellers here could join in. And initially, we could target this here, the 1.7885. But if that gets cleared, I have another upside line here. I have actually a few. But overall, you can see that we're on an uptrend. But something which is happening here right now is somewhat kind of bullish. But for me, a confirmation break above this territory here is needed. And EURUSD, so the final one here from all these instruments, but I'll look into the 10-year yield as well. So this one right here, the next one. Look, we had a good run, and we had a good test of this zone right there. So I would say I don't like it, actually. I mean, this worked out. Yes, no problem there. This worked out, but at this point, I actually going to take a very, very conservative approach here, and I'll wait for a pop-up of the 1.0945 in order to go higher. If I don't get that, I'm not really getting comfortable with with any of the higher levels. So long story short, 1.1050, yes, is the one that I'm going to be targeting later on, but for that I need to pop above the 1.0945. For the downside, well, ideally, of course, a break of this steep upside line would be needed. because again, any move, any kind of throwback here could still be classed as a temporary correction before another possible leg of buying. And finally, the 10-year yield. So, okay. It's difficult to apply technical analysis on that. However, because it's not like all your indices or your forex or crypto or even commodities, there's a lot of fundamentals in this as well. So it's wrong to base your judgment on just purely technical. So that's why I don't look at normally this stuff from the technical perspective, because look, in general, if the market turns south, then yes, of course, we could see the yields here pushing higher again. We could see a nice move north towards this downside line. In general, if we do just look at it purely from the technical perspective, then yes, we remain above the 100-day EMA on here is on my chart, and it acted as a good area of support, so we rebounded. So in a way, there is a chance for a push higher. But I think that for me, a push higher could come on a move above the 50-day EMA, and then yes, we could take it from there. We could target then this downside line, and we'll see if we can break that. Higher levels here could be met. But that's if we do apply technical analysis on this, which, to be honest, is not very correct to do. It's not very correct to do. But again, at least it's from my perspective. I think that there's still more stuff involved, so you need to look at fundamentals here. But at the moment, if suddenly, like I said, we start seeing some declines in the stock market, and yes, a push higher here could be possible. And in general, I mean, I'm kind of hoping actually to see a bit of a push higher, but what I would like to see ideally is something like this. This is what I would like to see. So I would like to see a push higher here, a test of this downside line, and then a reversal back down. That would be ideal. That would be my scenario, but hey, the market doesn't always give me what I want. So long story short, if you're looking for some lower levels from here, yes, if we start dropping below the 100-day EMA here and below this 4.38 zone, then of course, maybe this could open the door towards that 200-day EMA. But that's if we apply technical analysis. And I don't know how many times I have repeated this already, and how many times I will repeat this. But don't purely go from technical analysis on this. I do like technical analysis. That's what I mainly utilize. But with these, you have to be a little bit more careful. Because at the moment, yes, it looks a little bit more maybe kind of from the very short-term perspective. For me, it looks a little bit more bullish. But again, maybe I'm missing something here, and maybe it's gonna just fall off the cliff here and just go towards that 200-day EMA, and well, that means that the stock market could continue rallying. But maybe a bit of an adjustment here could be nice here as well. So guys, that's it for this session. I hope you found it useful. Thank you very much for watching and listening. Just a quick reminder again that tomorrow is my last video for this week, so if my last webinar. So if you want to join, please join. I'll be happy to see you there. You can always watch a recording as well, for sure. But yes, after that, I will resume on Monday. So I will be on a short break. So yes. I'll catch up with you tomorrow, 7 o'clock GMT time. If you cannot make it tomorrow, you watch the recording, or just join me on next Monday. So thank you very much, guys, and I'll see you later. Bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.